Greetings traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for April the 27th to May the 1st, 2020. And so this past week, the markets traded pretty flat. So coming into the week, we had a number of consecutive up weeks, and the question was the markets going to continue to do that sort of upward drift? This past week, it kind of took a bit of a pause, a bit of a reprieve. So for the most part, the markets traded inside of a range. And so the question is, are the markets discounting the possibility for future risk? Or was it just basically a bit of calm before the storm? Is it one of those situations where the markets are luring investors and traders to be a bit complacent before the volatility reappears once again? So that's the big question, because this coming week we have a lot of stuff on the econ calendar and the earnings front. So certainly would not be surprised whatsoever to see a lot of volatility this coming week. Let's talk about that econ calendar first. So we do have FOMC this week. The FOMC, the Fed meets on Tuesday, and then of course on Wednesday they're gonna have the Fed report as well as that press conference. But on Tuesday as well, we want to see that consumer confidence number at 10 o'clock, see how that turns out. Then on Wednesday, right in the morning at 8:30, you got that GDP number. So all eyes are gonna be on that GDP number to see just how bad things have gotten. So you definitely want to, to wait there and see what the reaction from the market is like, to see, are they rallying on bad news or are they selling on bad news? And that will be an important reaction to watch. Oil report 10:30. That's been fireworks lately. And of course, this past week, oil hitting negative territory for the first time ever. So, the oil is certainly still in play. And of course, that Fed announcement at 2 o'clock, followed by that press conference at 2:30. Then on Thursday, you still got that jobs claims number every Thursday, right? So you want to watch for that. Once again, the markets have been rallying on that U.S. jobs claims number, even though after this past week we now have 26 million U.S. citizens recently apply for jobs claims. The markets have been rallying on these large numbers, so you want to watch to see if this trend continues. Right now, people are buying into this weakness and buying into the bad news, and basically, people, the bad news is good news, because if the bad news continues, as you've seen already, the U.S. government is being forced to accommodate with more and more stimulative packages, and that is technically good for the markets. And lastly, on Friday, you have the ISM number. Now, on the earnings calendar front, man, there's a lot of stuff on the earnings calendar, so I'm not going to go through all of it, but certainly do check out the earnings calendar. Make sure that you're not taking any unnecessary earnings risk. But yeah, you got a full earnings calendar. All the really, really big names are reporting. For instance, on Tuesday, you got AMD, Google, Starbucks, Caterpillar, some airlines, and even some drug companies like Merck and Pepsi. There's a lot of names there, Novartis. Then on Wednesday, people are going to be watching Tesla, Facebook, Microsoft, GE, Boeing. Thursday, we got Apple, Amazon, Twitter, Visa, McDonald's, and letter X, just to name some of the highlights. Friday got Exxon, and a number of other ones like CVX. So definitely keep your eye on that calendar. Lots of potentially market-moving headlines here for the coming week. So as I get to the charts now, remember, was this week a simple consolidation week that's simply consolidating more gains? Or was this week used as a week for the markets to basically lure investors and traders into some complacency, just to introduce additional volatility to close the final week of the trading month? This is the final week of the trading month. Next week, when we do the videos again, we're going to look at the brand new opening levels for the month of May. But for now, we have one final week left in this month. Let's see how price transacts around those important levels that we'll talk about now. So let's get into the charts now, and as we always do, let's begin with our friend the VIX. So the VIX holding steady now for the month of April. So inside month, I know it's kind of tight there. It's kind of small because the charts are all skewed. But on the right hand side here, you got inside month. On the weekly chart, we actually had the first up week for a number of weeks, right? So we had a reversal there, reversal being up, down, reversal, down, down, down. This past week, we actually reversed above the prior bar's high. Could not stay above there, and you can see that line right there, that purple line right there, kind of a darkish line. That is a combination of your monthly and quarterly open. So this week here, you traded up to there, did not break above it, so that means there's time frame conflict. That means during the week, we had moments where price is trading below the weekly open. So early on here, we had full time frame alignment on the downside, but then we popped up above, had a bit of slight reversal there, and then we had a green week, but you're trading still with a green, with a red quarter, red month. So a bit of time frame conflict there, which is what causes this sort of reaction versus it being nice smooth moves when you have full time frame alignment like we had back here, 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 right? So now we want to see what happens this coming week. So for this part here, for the week, we are left with a shooting star. In itself is not significant enough, right? So you want to see what that next bar is. If you break below this bar's low right there, that will be significant, okay? This will be significant if you break below this bar's low and create another reversal back to the downside. Now we know what happens if buyers step up right away. Then you can possibly create a hammer, right? So that's a shooting star, and the opposite of shooting star is a hammer. So if it breaks below this week's low, but all of a sudden the buyers step right back up again and create a long tail, there's your hammer being formed. Again, the hammer will not be closed until the end of the week. This is a weekly bar. So intra-week, it's useful to see whether or not is there being a hammer formed, but you cannot bet on a hammer being formed until the hammer closes, correct? So that's something you want to watch out for, but you don't want to assign too much weight into it until the week gets closer to closing. So for instance, what I mean by that is, let's say on Monday it dives. It's just an example, okay? I'm not saying it's going to do that. It dives down and it creates this big swoon on Monday. Then on Tuesday and Wednesday, they buy it back again, creating a hammer. So then all of a sudden, you're like, okay, it's bullish once again. But guess what? The week isn't closed yet. So on Thursday, Friday, if things break back down again, it turns that could turn that potential hammer back into a big red bar, right? So if that's the case, then that's all bets are off for that hammer. That's just why you want to understand what's being formed intra bar. But again, you do not want to make too many decisions based on intra bar action because that's how you get chopped up. Okay. So just be aware of that right now, is that you have a shooting star being formed here. You break below that low, the expectations that comes out and takes out that low. But if all of a sudden the bar step back up again and creates a hammer and you're getting close to the end of the week, then you can stay with a higher probability that the hammer is going to stick. But if you create a hammer on Monday, Tuesday, or even Wednesday, there's no guarantee that hammers are going to stick for the rest of the week. Now, let's talk about the weekly chart. Tight stuff this week, right? So even though we had a pop up, this is fairly tight still. So let's just do it this way. Let's do it on the 2-day chart because it's a little cleaner. Let's start there. So here's our Monday. Our Monday opens up here. On Tuesday, it gapped up. And then for the rest of the week, it slowly peeled back. So there's a small inside bar down. There's your weekly open. Managed to stay green, right? That weekly chart's green. So there's your level that allowed to stay green. But for the most part, because most of the indices were trading inside week, when indices like the SPY trade inside week, the VIX does not like that. That means there's no volatility, and VIX is all about volatility by definition. So when you get inside weeks in the SPY, a great place to be shorting is the VIX, because you want to be basically shorting any spikes so long as the SPY can stay inside week, because the VIX will melt by default. All right, so there's your inside bar down on the 2-day chart. On the daily chart here, I'll just paint it in a bit. I'll give you a bit of color. I won't paint it in. But here's your Monday, right? Basically a small gap up, right? So this is actually gaps up above this bar here. You can argue that's actually a bullish kicking bar here because it opens up above the prior bar's high. So anyone who got short going into last Friday, look, you got trapped right away, right? It opens up here and you're trapped. It opened up, probably about up 5%. So you're trapped here, and they squeeze them all day, and then on Tuesday gap up again. This gap up on Tuesday filled this gap that was here. See, there's a gap right there. There was a gap there. It got filled. So now, question was, how much juice did the buyers have? They push it up on Tuesday and ends with basically a shooting star. Then there's a reversal. Once it breaks below there, it comes back to the range again. Now we have unfilled gap right there, right? So there's your green line, there's your unfilled gap. We have an unfilled gap right here still. Still, we have this 34.11 area, unfilled gap right there that hasn't been filled yet. So what happens there in that next sequence? Slowly melting now. what is the next bar. Because on that 4-hour bar, you have this little thing playing out where essentially, there's your Tuesday. It went inside bar. So, it gaps up on Tuesday, right? Big. Gapped up by 9%. The buyers could not do anything with that, right? Because then in the second half of the day, it went inside bar, meaning, stalemate. And so they, on Wednesday, good news came out for the indices, or at least no more bad news came out. And so they basically gapped down, trapping anyone who went up here, who bought up there, and they basically faded for the rest of the week. Outside bar up, melts right back through the range again, and then, stays above the weekly open to close the week. But pretty, pretty bullish day, even though it was an inside day for the indices. Pretty bullish because it was very tight, and basically no one bought any VIX going into the weekend. So that means the levels of puts to calls are pretty low. So, maybe a little more complacency than we had before. People not scared and buying any insurance going into the weekend. Let's talk about SPY now. Mirror opposite. We'll spend a little more time on SPY because the rest of the indices look pretty much identical to the SPY, and then we'll move on to some other interesting charts. So big picture, as we always do. 3-month chart is basically outside inside. So we would love for this thing to stay outside inside, right, for the rest of the quarter, because then we have a very defined range to go after in Q3. But we got a lot of quarter left, and I'm not going to make that call. It's going to stay inside quarter. We got a lot of quarter left. We still have 66 days left. So right now, inside quarter, want to know that because as I spoke about last week, when you're trading inside bar, you have to expect reversals. So right now it's trading inside month, right? Outside bar down, that's Momo down, inside month. So even though we're shooting up, right, it's been like a 30+% rally for some of the indices, you're still inside month, right? Because this week, month before that, month of March, was a disaster, right? So that came down 13% on the month of March alone. Add that to this 8% drop there, and so here now you have to rally back big time, right, from there to there, just to to regain some of these prior losses. So inside month right now, and so we got the inside week. So as I said last week's video, the markets are just basically grinding up right now. And if you're shorting, you're shorting at your own risk, because until you get a bigger, wider reversal on a higher time frame or time horizon, then the bias is to the upside. Because right now the sellers have not been able to show any strength, and they have not even been able to take out a prior week's low. So here it's Momo up on the weekly chart, outside bar up. This week stalemate. So this is why it's interesting now, because this coming week we really want to see how this range breaks. This will be significant because that's going to tell us immediately if it can break either side of the range and stay outside those ranges, which side is in control, right? So for now, it's been a slow drift up. Here now, we're back at the place in terms of price action where one party is going to have to step up and show their mettle, right? They're going to have to step up and reassert their control, because this week, no one had any control. It was basically a stalemate, right? Doji, tight week, inside week. That doesn't get any more clear than that, right? There's no one side, buyer seller, had more control than the other side. This week, if you can break outside one of those ranges and stay outside the ranges, that will prove which side, will show you clearly which side has more strength. So let's say, for instance, it goes inside week up. That just means the narrative is still up, right? So that just means keep following the path upward. That's still the line of least resistance. If it breaks below here now, you have an inside weekend down, which typically would be fairly bearish, because you have an inside weekend down. Situation here is that you have the quarterly open right there. Okay, so the chance of you flipping or turning the monthly and quarterly bars red is very slim on this week down, because you have the quarterly open and monthly open way down here. So for the most part, even if the bears can break below this week's low, unless they could do a huge flush and come back through this range, this may just be a situation where you get a bit of noise, a bit of selling to this, if it breaks below this low, but it may not collapse because of the fact that the bars are still green on the month and quarter. But this will definitely set up for something more interesting next week if we can break below this prior bar's low. Okay, or we just keep climbing up. All right. So that's very tight stuff on the SPY. On the daily chart, basically, we had this one move here. It's very time frame conflicted, as I said already, with the VIX chart, because here you got the quarterly, monthly open. You open up here on Monday, but then you gap down on Tuesday, right? So once you get down to here, you're below the weekly open, but you're above the monthly and quarterly. And so now you have these mixed time frames, because the week is red, but the month and quarter are green. And so the rest of the week, the market did its best to sort of recoup some of that, and so they were able to turn the week green. But look, that weekly open certainly acted as resistance, right? Hit that level, people didn't like it. They didn't want to turn that level, that week green. And finally on Friday, they were able to break above and close above the weekly open, keeping that week green. But it was not a big green week by any stretch of the imagination. Very tight range here, right? So now you know the areas, the levels that we're watching coming into the week. So this here, right? So this day here, like on Wednesday, basically a bullish gapping pattern, right? So bullish kicking pattern. This bar here opens above the entire bar here. So it's a gap up, trapping anyone who wants short, right? So the shorts are getting run over still. So anyone who got short, like you get short here, you make a bunch of money here because you did gap down 3%, or it did close the day down 3%. And then you take any shorts here going into Wednesday, you're wrong, right? Because it's the gap up against you, and you got to cover right away. And if you don't cover, you get squeezed on. So that's the price action there for the SPY. So at the end of the day, it was a very tight week, right? How do you know that? Well, we already saw the inside week, but look at the 2-day chart. Everything is sitting inside this mother bar. So that's your 2 days. So that's Friday, Thursday, Wednesday, Tuesday, and you got a bit of Monday, Friday here. So it's all sitting inside of this. Very tight stuff there. Now we want to see, how does it break, right? Because guess what? It's a 2-day chart. Whichever side of this range it breaks, of this inside bar, it's probably going to take out one side or the other. Okay, because that's how tight this week is. So those purple lines, we saw it already, those are your weekly highs and lows, right? So you want to pay attention to see now how it breaks in terms of these two inside bars, to the upside or downside, because whichever way it goes, if it breaks to the downside, it'll probably come this way. Breaks to the upside, it'll probably come that way because they're going for the mother bars highs or lows. That is going to be what we're looking for. Okay, so there's your SPY. Now we can go faster because the Qs are pretty much the same, as well as the Dow and the Russell. So Qs now go a little faster. Same condition on the month, on the quarterly, and on the monthly. Same condition. Week was also an inside week. So how far are we now from going back those all-time highs? We did give back a bit of ground this week, but still only 11% to get back to all-time highs for the Qs. Not far away. Okay, not big, but definitely a inside bar there by definition, inside the prior week's range. Outside bar up, Momo up right now. That is a kind of momentum hammer though, right? Because you can see at one point we were down here in the week, but the buyers bought it all the way back and pushed it up to here. So a bit of momentum on that bar there. If you break above that, that's going to continue that momentum to the upside. So inside bar, strong hammer there for the buyers potentially. And on the daily chart, inside bar reversal, still working its way up. See, inside bar down, reversal. As soon as it breaks above Tuesday's highs, they're gunning it back up now to try to take out that prior bar's high, the 215.88 area, which coincides with this week's highs. Okay, so now on that chart, we want to wait for that. Again, the 2-day chart looks like this, right? Just like the SPY, we're waiting to see how this guy breaks, which side of that range it breaks. Watching for that now. Does the 4-hour chart give us anything? I think we may have a small, you can see here. Outside bar down, so Momo down. Going into Friday, they bought it back. See, Friday went Momo down, so it came down lower. But as soon as you break above that high, now you're going after that pivot. Okay, so they're going after that pivot. And we don't have the high, this week's high that far away. So expect that pivot to get taken out. And if it doesn't, you definitely want to know that, because that means they ran a steam to the upside, and we can potentially float back down again, maybe test this bottom end. Again, that bottom end would be this area here. Okay, Dow, nearly identical. The quarterly and monthly charts are identical. Outside, inside on the quarterly, inside month on the monthly. But the issue with Dow is that it actually did a reversal. So this is interesting, because the Dow, out of all the indices, it has actually showed a bit of weakness on Monday. Was it Monday? Sorry, on Tuesday. But then they bought it back again. So here we had the reversal, right? So it did break below there. We did go outside, inside, and up. But this week, for a moment, we did break below the prior bar's low, technically creating a reversal. So some folks definitely got stopped out in this sequence here. And And shorts probably try to put on some shorts as well, but the buyers definitely pulled it back into the range again. So if the sellers can come back in this week and break back below this prior bar's low, they're back in strength again. So you definitely want to watch this past the prior week's low here, the 230.96 area, to see if they can kick this thing back in a gear back to the downside. The problem is though, is, you don't want to be overly bearish because you still got the month and quarterly red, and it's gonna be hard to turn that red with only 1 week left. So shorts are definitely gonna be easier with the new month coming up next week. For now, if you're taking shorts, they're probably gonna be profit takers because you can't expect them to run very far with this mixed time frame. So there's your quarterly chart, and on the daily now, what do we want to talk about here? Let's talk about this tight business, this tight action here, right? Outside bar and down, inside. So this whole week was basically inside of this bar's range. So we had a slight break below the prior week's low, but for the most part, you're inside the prior range. Tight trading there. You don't want to overtrade that stuff because you can get chopped up. On the 4-hour chart, you do have a bit of momentum now. Appearing. So there's your Monday, Tuesday gap down, breaking below the prior week's low. That's it right there. See, the sellers, they tried here. We can see that they tried, but they bought it back right away, and then there's a stalemate on Tuesday. On Tuesday afternoon. And then you gap up, the gap's up, bullish kicking bar right there. Anyone who got short down here, they're gonna get squeezed, right? If you don't cover, squeeze. Inside bar, outside bar, they tried again to short here, right? Look, they countered them with this bar here. Outside bar down, then up, covered, right? You got to cover going into Friday. If you get short here in the morning and all of a sudden it's Friday afternoon now and they take out this bar's high, it's not a good place to go going into the weekend, right? Now you got a negative position on, and the last thing you want is to see more good news happen on the weekend, over the weekend, and then on Monday it gaps up again against you. Then what do you do, right? So that's the they definitely squeezed the sellers and shorts going into Friday's afternoon session there. So the question now is, was this a innocent break to the downside? But again, if the sellers can step back up and somehow reclaim this, so back to the 4-hour chart, if they can go outside bar down and break below here, that's this low is not that far away. So that on the daily chart, it would look like this, right? So here's your daily chart. Went down here, so technically you'd have to break back below here again and to come back down to that range again. So even looking at it that way, it's not a great move. The 2-day chart's a little cleaner, but there isn't much telling you right now that it's going to be an easy short. So on the 2-day chart, you might have an easier short there, but yeah, it's very choppy stuff right now. You don't want to be overly active because the markets are not trending by any. This is no longer a trend, right? This is flat stuff and getting choppy with mixed time frame alignment. So there'll be easier trading opportunities coming up. So Russell, pretty much the same higher level charts. Outside bar, on the quarterly charts and outside inside, right? On the quarterly, inside bar for the month, and on the week, inside week. So very tight stuff. Once again, we want to see how that range breaks. So inside bar up, now inside bar stalemate. Okay. Well above the quarterly monthly open. Bias is still to the upside. Okay, and for Russell, 2-day chart says it again. Tight stuff, very tight stuff. Outside, inside. It actually did pop above this mother bar there, but it came back inside again. Ultimately, thinking this pivot high can get taken out. That'd be the natural. Path of least resistance. Wait for this thing to drift up and take out that pivot high there, which will crack above the prior week's high, creating inside weekend up. So that would be the bias still at this point. TSX, how is the Canadian stock market doing? Well, again, slight upward drift once again. Same exact higher time frame pattern. Outside, inside on the quarter, inside month on the inside month, and on this weekly chart, we did go up slightly this past week. So we did go above the prior week's high, but it did come back in the range. So very tight stuff again. Markets basically is taking a bit of a week off here. Although there were some really big, rallies on some individual stocks, but the markets themselves, the indices themselves, did not move that much. So the TSX, just looking at this chart now, outside bar down, right, reversal back up again, expecting that pivot high to get taken out. This high here, this outside bar high, expect that pivot bar to get taken out. And if it doesn't, you want to know that because then it's coming back to the range. So expect that to get taken out though, because the drift for now is higher. Okay. How about emerging markets? Is that any, how's the performance there? Red week, okay? Red week and actually a reversal. So on the quarterly chart, it's going to be an outside inside like everything else. Outside bar, inside bar, right? Monthly chart, inside month. How can it not be inside month after the prior month's range? Inside month, sitting below this broad information. Hit that level right now, acting as resistance. So right now, it's not able to hold above it. Weekly chart, outside, inside, running out of steam here. So outside, inside, up, up. But this week we actually broke below the prior week's low and it stayed red. Yes, it wasn't a flush because it came back in the range again. But this is not a bullish candle, even though it's a bit of a hammer. If it breaks back below that purple line again, like I was talking about for the Dow, it's basically a resumption of the downside. The only issue here is that you have this support line right there, so that's going to be a bit of an issue. So the buyers, I said, the sellers are not going to have the wind to their sails necessarily until the coming month. But then you're going to have the quarter there still. But that's what we need to watch for. Okay, so for the Russell, I'm watching this daily chart here. Here on the daily chart, outside bar down. All right, so what's the next bar for that Momo down condition? Outside bar down, back up. If that's the case, we're coming after that pivot. Otherwise, can see how long that Momo down condition can last. Okay, because that week's low is right there, the prior week's low. And if it breaks back below here again, we're back in that reversal situation, things going back down. What about bonds? How are they doing? Well, people actually jumped back into the bonds this week. So we actually got a Momo up condition on bonds now. The bigger picture on bonds is this. So inside bar, up, inside bar. It's basically on the quarterly chart, it's a consolidation pattern. On the monthly chart, consolidation pattern, outside, inside. How do you break outside that huge range? You probably don't this month, right? You probably don't. 1 week left, unless something significant happens, which causes the bonds to spike from here to there. It's got to move 5%. This past week it moved 3.5%. So anything's possible. It could certainly go in. It could certainly move another 5% to the upside here. That's possible. That would create a Momo up condition on bonds. So let's watch for that. See if that happens. But for now, the bias is still the upside. You saw it already. The quarterly chart's up. The monthly chart is consolidating. Weekly chart. Momo up, Momo up, outside bar up, that's Momo up, okay? Did fall back in the range again, but it's, you're still big green bar to the upside there for this week, Momo up. So on the TLT, I'm watching this day here. Look how tight that is. Inside to close the week. So basically, coming week, we want to see how does price transact against these levels, because there's your prior week's high, and you're sitting right there with 2 inside bars representing 4 trading days. So that's range trading, right? That's tight stuff, consolidation. Now, how do you break out of that? Because this is Momo up on the 2-day. Outside bar, up, up, inside, inside. As things pops up, that's Momo up still. Okay, so watching for that Momo up condition to continue. Like we said, moves another 5% up. That changes this monthly bar from being an inside bar to maybe a Momo up bar in the month, and then that's all Momo, right? It's Momo on the monthly, on the week, and that's also going to be on the 2-day chart. So watch for the potential there for bonds. That's going to be signaling something, right? Important. Let's talk about gold now. Gold had an interesting week. We had a small reversal on gold, but then the buyers bought it back again. I had a trade in gold where I played a little bit too tight, a little bit tried to be a little too cute, and unfortunately I could not stick in that trade. But the gold, there was a nice move in gold we had this week. So let's take a look at the micro gold futures contract. Here we go. We want to see Momo up. This is Momo. Let me turn off this here. There we go. That's Momo. This is the quarterly chart. Okay. Outside bar up, inside up, up. Okay, so that's Momo up on the quarterly. Monthly chart. Okay, Momo up on the monthly. Still trading above the prior month's high. So momentum still in gold. Okay, on the weekly chart here now, we had a small pullback that buyers bought. Okay, so this week prior, we wanted to see how it traded around those ranges. It went down, caused a reversal, but look, it tapped close to that 8-period weekly average, 8-period average on the weekly chart, so 8 EMEA, and popped back up again. Buyers bought it, and so on the daily chart, it looked like this. So coming into this week, it was going Momo down. So remember, this is the fun part about trading, is that you have to have the ability to be able to juggle multiple and competing viewpoints. So as I mentioned already, on the quarterly and monthly charts, it's momentum and up. But on the daily chart, we actually had a Momo down situation. So what does that tell you? If the higher time frame charts are going up, then on the lower time frame charts, these are going to be viable pullbacks, right? So this is a viable pullback. So Momo down, and this is why you don't want to lose the forest through the trees. If you only focus on the daily charts, or even on the lower intraday time frame charts, this is why I do these videos, even though I trade a lot intraday. Having the ability to carry a bigger or wider perspective helps you create a better bias. So in this case, you know your higher time frame bias is up. So even though this looks scary intraday and on the daily bars, so long as the higher time frames do not turn down, this is a viable pullback, and it was. So here is going outside bar down, down. Once this high gets taken out, it extinguishes that Momo down. And look, there's your weekly open, and that holds. So now you have full time frame alignment. Purple line is the weekly open. Purple line is your monthly, quarterly open. Full time frame alignment to the upside. So the trade was here, and unfortunately the data on TradingView, because I don't pay for the futures data, isn't the same as the paid data that I use with IQ Feed on my other charting platform. But I'll give you a broad swath of the trade. I actually took it on the 4-hour chart, but I'll show it to you on the 6. But it's basically this pattern here. Okay, so just to make it clear, the daily chart is this one here, right? You're looking for a reversal because it's a pullback. It's a pullback. You're looking for price to resume its uptrend. The only way the way that price reverses on the daily chart is if it breaks above a prior bar's high, right? So when you're here, when it's this day here, the 20th, this is Monday, what's the chance that it's going to break above this bar's high this day? Not that high. Here, price closes there. So now on Thursday, sorry, this is Wednesday, you have a good chance of perhaps breaking up above there. Remember, this day here had a chance to break above there, but did not do it. You'll see the price pattern. The price did not come close to doing it. Here now, when it opens there, you have a chance to take out that bar's high. We're looking to trigger this bar's reversal back to the upside. So I take that setup on the 4-hour chart on my trading charts, but it looks similar to this on the 6-hour chart TradingView. There's that blue line. Okay, when I say they could not take out this bar, the prior day's high, it's because it did this. It went inside bar, outside bar, and down. There was no chance to take out that prior bar's high. Here now, it goes outside bar down, Momo down, looks scary, right? But they buy it back because we know if you just focus on the 6-hour bar, it's even scarier than looking at that daily chart, right? Now, you know, as I zoom deeper, look, that's the 4-hour chart. There's your Momo down condition. If I go into a 2-hour chart, right, that looks aggressive, right? You may not want to be a buyer of that because you're zooming down so low. The 60-minute chart looks like this. Let's go down to the 30, right? If you look at that, you really want to be a buyer of that? If you zoom in, you know, you're too zoomed in and you don't see the rest of the context, that could look dangerous, right? So on the 15-minute chart, it looks like that. So a lot of folks, they see that, they're like, there's no way I'm going to buy that dip. That looks you know, that looks a bit scary. It moves from 1720 area, let's just call it 1718 area, all the way down to 1662. Okay, you can see the red. Oh, look at all the red volume. It's people are selling off gold. You take a step back a bit, and you realize this is just a pullback in a strong uptrend. So that strong uptrend looked like this, right? So here's your strong up, you know, your pullback, big uptrend. We know that. And then the buy is above this bar's high. Outside bar down, you break above that bar's high, and you get the extinguishing of the Momo. So that's what I did on the 4-hour chart, the 6-hour, but you know what I've said already. Unfortunately, I put my stop a bit too tight because this trade happens overnight, and I'm not there to manage it. I left my stop there. So price came to get me here overnight, stopped me out before the nice move to the upside there. For I think it was roughly about close to 3-hour trade. I'd still be long right now if I wasn't stopped out of that. But again, you know, that's the idea of using the higher time frames to guide your lower time frame biases. Okay, so nice trend in gold. Expect the let's see if gold continues or not, right? Because now on the gold chart, it's still trending upwards. And now to end the week here, let's just take a look. Yeah, let's look at that 6-hour chart. Look at that outside inside to close the week. So now, which way does this pattern break on Sunday night? Sunday night, you know, the 6 o'clock futures open, 6 o'clock EST, excuse me, 6 p.m. EST. The futures will open. We want to see how it breaks this pattern there. Okay. Because to end the week, what we're looking for the weekly chart is we're looking for reversals, right? So here, that's your new range. You want to see now, can you break above that purple line? Okay, so that's your purple line right there. On Friday, it went down. Okay, that's a reversal on the daily chart. We know so long as you have trend is up still, you're looking for this high to get taken out, which will then take out that pivot high. Correct? And on the 6-hour chart, it will be there, right? So if this outside inside works to the upside, going after that pivot and then possibly that pivot, causing the reversal on the weekly chart. Okay. So actually, I'm gonna draw this line in as well right there, because that makes it very, very interesting. That's getting very close now. Outside inside. This is going to be a nice setup on Sunday night. If it breaks above this pivot high, going after that, triggering the daily reversal, and then going after the weekly reversal right there. Okay, so that's a great setup to watch for on Sunday night. Let's talk about Bitcoin, so digital gold. And BTC, USD hanging in there, had a decent week this week. You know, a little bit choppy the past few weeks, but the bias has been up. So we know the picture. It's tight stuff in terms of the quarter so far. Outside inside, right? How do you get outside that big prior bar? Monthly chart still inside bar, right? So we expect to have reversals when you have inside bars like that. So the reversal came last week, right? And it happened again this week. Reversal meaning this bar broke below that bar's range, below, right? So there's a reverse of price to the downside. But you're still trading above the monthly quarterly open. This is why I was saying on the indices, you don't want to get overly negative and go crazy short, because price can simply pop back up again because the bias is still to the upside, because the higher time frames are still pointing up. This week reversed it again. So went reverse to the downside, reverse to the upside. That is called, you know, a lot of back and forth, which causes you know, some people get chopped up because they don't recognize that the monthly bar is there. So you have to expect those things to happen. So this week it did break above that bar's high there, and so now you have price drifting back upwards again. Got as high as close to 8,000. Yeah, on the Bitfinex charts it got to 773 or 77.73. But for the most part, we're looking at this and how it plays out. So on the daily chart now, we had this inside bar reversal, inside bar down. This break to the upside when it took price back up again. A little tricky trade because if you buy this, you're still below the weekly open, so it wasn't a high. You know, it's in hindsight, yes, that's an easy trade to take, but in retrospect, you know, like clearly, I wasn't willing to take that trade because of just the mixed time frames. But certainly that trade's working out so far. Not a big fan of this. You know, the fact that we're still inside month and we have one more week left. This is pretty choppy stuff right now, right? If you look at just the daily chart, that's very choppy and hard to hold through that stuff unless you have really, really good trade location. On the weekly chart here, a little smoother, but you can see the lows and highs are being violated, so not an easy chart to hold on to if you don't have good trade location. Okay, so there's your BTC chart. Slow drift up right now with full time frame alignment to the upside. So bias is up on BTC. Okay, so let's finish up now with some fast fire charts. Here's some interesting charts that I came across for the coming week. This will be some names on my watch list. So we have industrials looking interesting. So XLI, 2 inside weeks in a row. So outside, inside, up, inside week now. So as I said in the beginning, is this just the calm before the storm? Is it showing complacency, or is it just a little bit of consolidation before we pop up? So, and you know, and we continue our drive to the upside. So need to watch for that now. 2 consecutive inside weeks in a row. Definitely, you know, it's coiling. Something's going to pop here now. Probably going to resolve itself this week. So XLI, you definitely want to be seeing how it transacts or trades in relation to this past week's inside week. Because if you look, you have a bunch of names inside that XLI that look similar. Like, I'll just show you one. Letter X, US Steel, double inside week. Okay, so that's gonna pop. We know we have earnings this week. We had this earnings coming week this week as well. So that's certainly gonna resolve this inside week pattern. Guarantee you this coming into next week when we do this video, X will no longer be inside week anymore after earnings season. We got the home builders also consolidating. So everyone's waiting for the earnings here. Inside week consolidation. What's going to happen? So if we look at all the home builders, I'm not going to go through all of them, but here Toll Brothers, same thing. And went inside weekend down, but he popped it back up. So potential inside buy reversal, back to the upside again. Pulley Homes, tight stuff. Inside week down, earnings coming up here. If it pops back up, right? You get inside buy reversal long to the upside here potentially on PHM. WDC actually went to the downside this week. So here, this is an example of this recent price action now falling apart. So we had that big bounce here now. The price did break slightly below this past month's open and quarterly open. So if WDC breaks back below this low again here now, this will be one of the names I'll be watching for in case you believe in the prior lows scenario. So I'm watching WDC as a potential good short here now. If it breaks back below there, we're coming back down here testing those prior lows. One of my names on my short watch list potentially. BA, I'm actually short right now. So BA does have earnings, so I need to watch out for that. But got short earlier in the week and was watching to see if it could basically break below that week's low. Did that. Inside week low, broke below that. It's an inside buy reversal to the downside on the weekly chart. Looking for at least 120.02. This level here to get taken out now short inside of this area here. So nice move on Boeing. Got earnings coming out, so let's see what happens there. Tilray, nice move for marijuana names this past week. Tilray being one of the big ones. Look, triple inside week for Tilray. 1, 2, 3 inside weeks. Popped up big. 24% return on Tilray for this week. So watch for those consolidation patterns. Big returns on Tilray this past week. Lyft, interesting name. I believe we don't have earnings until next week. So not this coming week, but next week. Double inside week. Okay, so watch for the double inside consolidation patterns. That could potentially give us returns like Tilray here if these things pop up and they really run. Another one that's interesting that's going to be on my watch list, SFIX, Stitch Fix. Earnings not until June, so a lot of time still. Double inside week. Again, something's going to pop out of these guys. Still trading well above the monthly quarterly open. Got a long bias on that one. Signet here. So here we go. Jewelers, retail. I don't know who's going out there and buying jewelry right now in these stores. I don't know if they're even open. So the bias would, just on the fundamental news would be the downside, but you don't know at this point. You saw Wingstop this past week hit close to all-time highs, I believe. There's Wingstop. Wingstop sells chicken wings, right? Look at that. All-time highs, and the stores are not even open, right? So the market is, you don't have to make sense of these things sometimes. The price is what pays. And so if you don't believe Wingstop should be up here, and you're short, it doesn't matter what you believe. You're losing money. So at this point here, the market's not trading on what you believe is right. The price is reflecting what the what perhaps future earnings are going to be. I guess some traders or investors believe that when the restaurants do open up again, it's going to be a rush to wings. Let's go back to financials now. Yeah, so financials really consolidating. So the financials already reported earnings, right? So I think most of them already reported earnings. We do have MasterCard and Visa coming up this week, but here the XLF, outside inside, up, inside, potential inside buy reversal right there on XLF. We break below there and come back to the range here again. Issues, you still have that line there for support. But a lot of the names like your Wells Fargo's, so WFC, look at that. It did a inside buy reversal. This thing's already trading close to below. Yeah, it's trading below that support line. So now you got to watch out. That's full time for alignment to the downside for WFC. Citigroup, borderline, right? So there's your level right there. Inside buy reversal potentially here on Citi this coming week, and you got a double inside. So watch Citi. That's going to be one on my watch list. Did I say Bank of America yet? I don't think I did. Yeah, Bank of America, same pattern. I think maybe I did. Yeah, same pattern there. So just draw that level in, and just to get some broad exposure, just go to the letter FAS. That's your ETF. Okay, directional bull shares did a inside bar reversal, right, to the downside, short, inside bar down. Okay, coming back after this range here, you do have that level right there supporting you. So financials looking a bit iffy there. CGC, I think we talked about marijuana names already until Ray, But here, CGC had a nice little pop this past week, up 3%. Potentially more gains to come here, unless somehow it can break below this past week's low. If that happens, watch out. It can come back to the range again. Okay, so let's wrap things up now with a few fast fire stars and dogs. So on the big plus list, and again, the fast fire stars and dogs are based upon stocks that had a really good trend this past week. So I use the modified Sharpe ratio to find the stocks which are trending the most, seem to have the most positive impact on trend. That shows you where the money has been going. So CHK, man, this thing has had a terrible multi-year run, but this past week it had a pretty big week. So up 176%. That's not a bad week, but we did have a split though, right? Earlier, about 2 weeks ago, we did have a split there. But again, this thing is known for having big runs just to give it up again. This thing, in the grand scheme of things, 176% is nothing when you've come from, from these levels here. You've done multiple reverse splits. So had you been a long-term shareholder, it doesn't matter what this week's trading was like. But if you bought this week, congrats. You probably made some good money on that one. But for long-term shareholders, that's not a winning situation there. Okay, CHK, some money went to that. WLL. So even with all the negative crude oil news, some of the oil companies really rallied hard. So look at this. WLL was up 229%. Very small name now. This thing used to be trading, way up here, way up at 300 something bucks. Now trading at $1.12, but had a good week. Okay, WLL. We had names like Halliburton. So good week for Halliburton. Good trending week. So let me go on the daily chart here because it's a little smoother. So we had basically outside inside up for Halliburton. So good strong week for Halliburton. DNR. So Denbury. Good strong trend here. Friday did see some profit taking though, but it had a big strong trend of most of the week. Beyond Meat, a lot of money went to Beyond Meat. Closed the week out very strong. Beyond Meat, look at that strength there, coming right in. They bought it basically every single day. Consolidation on Wednesday, fired off on Thursday, Friday. SFIX, I think that's one I said it's on my watch list. Money, it's still consolidating, but money's flowing into it. That looks tight, but my trending indicators are telling me, the Sharpe ratio is telling me that it's actually trending better now. So watch for SFIX here into the coming week. Now some of the dogs, VIX, we know that already. VIX has been melting. VIX melted basically all week. Tuesday had a big gap up. Last week, strong trend down. UNG, okay, natural gas selling off into the close of the week. USO, so we know the oil story. USO is still ugly. So the oil company names, some of them are really rallying, but the actual USO ETF going to the pits. Now IBKR got caught up. This is Interactive Brokers, the brokerage company, got caught up with that whole oil story because of the futures contracts, and they took some losses there. I think around $80 million is what they're facing in terms of losses because of that the oil contract mess. But they closed near the lows on Friday. So IBKR, to the downside all week. And the last one I'm going to show today is Hertz rental company, car company, right? People are still not renting cars in this environment. The business travel obviously has been impacted in a big way. Not good for names like Hertz. So that takes us to the end of the video. I hope you enjoyed this week's video. As always, if you like them, please give it a big thumbs up so other people can find our videos. And if you want to know exactly when they drop, just click the subscribe button. Then you'll get notified on YouTube. Or you can go to my blog, thetradingedge.org, where you can subscribe to the newsletter. That way you'll get a little email each week that tells you about the video, as well as some of my perspectives on trading and other things around trading. And once again, I hope you take care of yourself, stay healthy, stay strong, take care of your family, and look forward to talking to you again next week. Have a great trading week. All the best.